Hey guys, I'm back, and it feels pretty good. I'm Jon Schwartz, a house hacker, investor, and realtor in Los Angeles, California, and you're watching House Hack Los Angeles, a channel about winning in the Los Angeles real estate market. It's been a few months since my last post, but I had to get my business in order, and now I'm back with a regular schedule of great content. You're watching my weekly LA market update, which comes out weekly, and I have a bunch of great videos on tap. A few house hack property tours, a long-promised 2021 year in review so far, and some deep dives like, is it ever worth it to buy a condo? The answer is yes. So if any of this sounds good to you, please subscribe and hit the notification bell so that you'll get the alert when new videos drop. And now, without further ado, let's get into the weekly Los Angeles real estate market update for May 17th, 2021. And guys, this rough buyer's market is only getting rougher. Each Sunday, I review the week's MLS activity for Los Angeles County to bring you the latest in what's happening in our market. These numbers come straight from the MLS, and you won't find these graphs anywhere else because I make them. If this is your first time watching the weekly update, here's a quick explainer. Each graph covers the previous 12 weeks. The bars represent actual weekly numbers, and the blue line represents a 4-week trailing average. This smooths out the noise and helps us identify trends. All right, let's get into this week's data. We start with a brand new graph, LA County Vacancies as reported at apartments.com. Now, this metric isn't scientific. I just check apartments.com every Sunday to see how many vacant apartments are listed in LA County. As you can see, we've been trending downward for the last 11 weeks. Obviously, for investors and house hackers, this is very good. The pandemic elevated vacancies last year, and it's great to see we're heading back to LA's historically low vacancy rates. Looking at single-family listing activity, we see a relatively flat trend in net new listings per week. In this graph, the bars stretching upward represent new listings on the MLS. The deep red bars stretching downward represent listings that have left the market because the property sold, and the lighter red bars stretching downward represent listings that have left the market without being sold, which means the listings expired or withdrawn or were canceled. The blue line represents a 4-week trailing average of the difference of the net change in listings. On net, we've been trending between 650 and 680 new listings entering the market each week. We saw an uptick this week, and hopefully this uptick becomes a trend as we enter the busier spring season because, frankly, inventory is not at all keeping up with demand, as we'll see in our next graph. Looking at single-family sales indicators, we see a market that's just crushing buyers. The relatively good news is that the average price per square foot has grown only $10, from $725 to $735 over the last 12 weeks. The bad news is that over the same period, median days on market has plummeted from 21.3 to 11.5. A median days on market under 2 weeks indicates a very fast-moving market. And lastly, sales price to list price ratio has hovered around 100% this whole time. So what do these metrics mean when considered together? Put simply, buyers are at a breaking point. They literally can't pay more than they're paying now, or else average price per square foot would be growing faster and the sales price to list price ratio would persist above 100%. Instead, median days on market has shrunk drastically. Buyers are emptying their wallets, then doing everything else they can to win the competitive bidding, and that speeds up the market. It's not reflected in the data, but I know from my own experience that traditional contingencies are becoming a relic. Sellers absolutely have the upper hand right now, so if you're looking to buy, you'd better be looking to buy a house hack. In condo listing activity, we see that the market is contracting ever so slightly, with net new listings down to 202, though the last 3 weeks have seen an upward trend in new listings. Like with single-family listings, I'm hopeful that we're seeing the beginning of the busy spring season. Broadly, though, the last 12 weeks suggests that the unique condo buying opportunity presented by the pandemic may be winding down. Our next graph suggests the same. Looking at condo sales indicators, we see a market that's changed rather dramatically in the last 12 weeks. Average price per square foot has shot up from $576 to $623. Meanwhile, median days on market has fallen to 19, and the sales price to list price ratio has hovered around 100%. What's going on here? Well, in 2020, we saw a trend out of urban areas and into more suburban areas of Los Angeles. That means selling the condo downtown and buying a 2-bed in Sherman Oaks. For that reason, condo pricing was better, there was more condo inventory than usual, and condos were sitting on the market much longer than houses. Well, as more and more Angelinos got vaccinated and began to see the light at the end of the COVID tunnel, the trend has already started to reverse itself. Pricing is up, days on market is down, and as we saw in the previous graph, inventory is starting to decline. Now, I'm not saying that the condo opportunity is over. I think it's still a smart time to buy a condo in an urban area of Los Angeles, like downtown or WeHo or NoHo, and we're going to explore this topic more in some upcoming videos, so subscribe to the channel now. But we can see that the window on opportunistic condo buys is already beginning to close. In residential multifamily listing activity, and remember we're talking about 2 to 4 unit buildings here, net new listings is trending down ever so slightly. Multifamily, which is mostly traded amongst investors, isn't nearly as cyclical as the single family market. What will have an impact is the lifting of the eviction moratorium, which we should see in the next month. The big question is, what actually happens when the moratorium is lifted? How backlogged are the courts? What new protections will LA City and other municipalities put into place to further protect tenants? Looking at sales indicators, we see a market that is heating up. Average price per unit is almost exactly where it was 12 weeks ago, but median days on market has been slashed from 53.6 to 19.3, and sales price to list price ratio is edging up toward 100%. So investors aren't necessarily paying more for properties, but the eagerness to buy is there. I would expect residential multifamily to become even more of a seller's market when the moratorium is lifted. And the pre-COVID multifamily market in Los Angeles was tough. Even in multifamily, if you're buying in Los Angeles, you have to buy smarter. And that concludes our first market update in a couple of months. It's great to be back. Please like and subscribe if you learned something new. Drop any questions in the comments and visit my website, www.househack.la, to learn some more about how I help house hackers find great deals even in LA's ultra-competitive market. See you next time.